Welcome to Get Started Investing, a podcast where we help you learn to invest in 15 minutes or less. Each episode, we take one real-world business story and apply a key investing lesson to help you build your investor toolkit. If you're joining us for the very first time, welcome. We strongly recommend that you scroll up and start at episode 1. And just a reminder, before we get going, we are not experts. We're not financial professionals. Ren and I are not licensed. We're here learning just like you, and nothing on this podcast should be taken as advice. Please don't take investing advice from a podcast. But with that said, my name is Bryce. As always, I'm joined by my equity buddy, Ren. How are you going?
I'm very good, Bryce. We've got 15 minutes and you took 2 with the intro. So let's get
that.
into it. Today we're talking about F45.
Yeah.
Fitness empire.
Well,
started in Sydney, Australia.
Yes, Paddington, Australia. Ambitions of being a global gym.
Oh, no. It is a global gym.
It is.
You can't deny them that.
That's fair.
There's one right near the office, the new office we've moved into. I've thought about going, haven't pulled the trigger yet. But the reason we're talking about them is because they were a hot IPO in 2020, was it? Or 2021?
20, just before COVID, I'm pretty sure.
No, in COVID.
Well, then 2020.
Okay, yeah. That whole COVID period's a bit of a blur.
It is.
Somewhere in that COVID period, they were a hot IPO and they're now not so hot. So that's the business story we want to talk about today. And then we'll talk about some lessons around IPOs generally there. But Bryce, let's crack on.
So I'm just going to fact check. It was 2021.
Okay.
Yeah.
Love that. Live fact check.
Yes.
So let's get into the story. It IPO'd in 2021. For people who are unfamiliar, IPO,
yes.
Initial public offering.
Nice. I was just going to do a jargon buster. It's when a private
fact
company...
check, jargon buster. This guy's firing on all cylinders today.
It's just, it's when a private company becomes publicly listed and you and I, Ren, can buy it on the stock exchange.
Yes. Now, it went public at $16 a share.
Yep.
What happened after that?
Well, Ren, since then, it's plummeted 79%.
Yeah.
In a big way.
Yeah.
It was backed by celebrity Mark Wahlberg. And since then, it has been a tale of ambition that couldn't be met. And essentially, the stock, the business has come to a grinding halt.
It's very Shakespearean of you. A story of ambition that couldn't be met.
Yeah, I'm actually really proud of that.
So, hit me with some of the key details. You told me that Mark Wahlberg, Marky Mark.
Yes. So as you said, it took off with great fanfare, but then it all kind of turned sour. Celebrity backer Mark Wahlberg sold 1.1 million shares in March and then another bunch in April for a total of $12.2 million. But Ren, I said the stock has plummeted 79%. If he was still to hold those today, they would be only worth $2.6 million.
So he
did all right. He did all right. 3 weeks ago, the CEO and founder, Adam Gilchrist, not the cricketer, has resigned.
That is like his permanent prefix.
I know.
Postfix, whatever is after a name.
Yeah.
Every article, Adam Gilchrist, brackets, not the cricketer.
So the CEO has resigned. The company also announced they were going to fire 110 employees and slashed expenses. 300 US franchise sales have also been cancelled due to the collapse of financing, and another 300 are reportedly in doubt. Now, we know with a business like this, it is all about franchise growth.
So just for people who are unfamiliar, you see a whole bunch of F45's. There's thousands around the world. F45, the parent company, doesn't own them all.
Yeah.
There are individual people that go to F45 and buy the right to create an F45, and they get the branding and they get all the IP and the equipment and stuff like that. Same with Macca's. Like the Macca's parent company doesn't own every McDonald's. There's individual investors that have bought a franchise. That's F45's business model as well. But there are less franchises than were originally projected.
Absolutely. And Ren, it doesn't stop there. Last week it came out they are now facing 5 lawsuits. Yes, 5.
Yeah, need to take that last one with a grain of salt. There are 5 law firms, like investor rights law firms in the US, trying to get as many F45 investors as possible to do class action lawsuits. But that doesn't mean that they've done anything wrong. It just means that the world is incredibly litigious and these lawyers can smell a chance.
Yeah, sure.
But we will get to the lessons, and there is a lesson there. But I think the long and the short of it is, Bryce, in 2021, F45 had grand ambitions. I remember we spoke about them in a summer series episode, and they had global expansion plans, like thousands of new F45 gyms around the world. But then they were also going to do like a seniors gym.
Yep.
Do you remember that?
Yep.
And then there was like something for students
Yep.
as well, and
Yep.
they had all these different like offshoots.
University campuses.
Yeah.
So it was all there in front of you as an investor, enticing if you were, thinking that, I've been to an F45, I get it, I love it, they're going public, big fanfare, Mark Wahlberg backing it.
Yep.
You can see how it could be an appealing investment.
Yes. And then the funding market turned, and that's a story that's happened in 2022. So it's been a lot harder to raise money, and a lot of unprofitable companies have seen their share price fall. So it's harder to borrow money, and then it's harder to sell shares to raise money as well. And F45 has been caught up with that like everyone else. You were saying it's down 79%. It's actually down 79% this year.
Oof.
It's down about 85% from when it IPO'd. So it's tough. And then the story goes from bad to worse. CEO getting swept out, firing employees, now facing lawsuits. So that's the story.
All right, Ren, we usually do one lesson, but this story is jam-packed, so we're going to try and get through 3 in the second half.
We're still gonna hit 15 minutes. So Bryce, what is the first lesson?
Ren, the first takeaway for me is that IPOs carry risk.
Yes.
And it doesn't mean that they're bad news. It doesn't mean that they're never successful, but they do come with risk.
Yes.
Yeah.
They are the moment in time where you've got the least information about a company because...
Why is that?
Because they are just becoming public, so they share like the last year or two, but they don't have the track record of public market reporting that a lot of other companies do. They don't have the scrutiny of being a public company for a long time.
And when you're saying they've only shared the last year or two, you mean of financial information, of the workings of the company?
Of everything. Yeah. So just by the nature of them just becoming a public company, you've got less information about them. But also the nature of an IPO is that early investors, founders, early employees will sell their shares into an IPO. So it's just a moment where people who were early are trying to cash out. And so the nature of that moment is they will have made the business look as good as possible, and they will make the projections look as good as possible because they want to cash out for as much as possible. And we should be very clear. Most IPOs, a lot of those people still hold, like the founders and stuff still hold shares. Yeah. But it's just a moment where you're putting lipstick on the pig and you're getting ready to go to the ball, and how many metaphors can we use here? And so the first thing is just be aware what an IPO is. It's the moment of like maximum hype and excitement, and some of that, a lot of that is real, but as much of that as possible is manufactured.
Yeah, and we know that when expectations and hype are not met on the share market, Ren, we often see that the price of companies fall. And that leads to the next one, which the lesson is to be very careful of IPO projections. Ren, you've just outlined that it is a point where companies are trying to make themselves look the best possible. They're going to put out juicy forecasts for revenue, for growth, that in some instances are never met. And so if you're buying in on that and investing based on projections, not knowing how the companies have performed over the last few years, it again comes with some risks. So be careful. So
let's put some details on that from F45. They forecast in their IPO projections that they were going to sell 1,500 franchises this year. They're now targeting 350.
Bang.
They projected $275 million in revenue for the year. They're now projecting 120 million, so less than half. They reported adjusted EBITDA, which is like an adjusted profit metric. Just
jargon alert.
Yeah. They projected $100 million. They're now projecting $25 million. And they projected between 50 and 60 million in free cash flow. They're now projecting 10 million.
So to break down the jargon there, Ren, essentially what has happened is all the projections that they've come out and said they would hit, they're now revising, in some cases, down 75%. Or a quarter of what they said they were going to be doing.
Yeah.
And as a result, we've seen the market has punished them.
Yeah.
Stock down 89%.
Yeah, exactly. And they would say that the market changed, and so the facts changed. The facts changed and the projections changed with it, and that might be completely fair. But it's just to be mindful that what an IPO is this moment where there's excitement and hype, and the business is looking as good as possible, and the projections are rosy, and so it's all investments are risky, but IPOs have that like additional layer of risk on top of it.
Yeah. I actually have a fourth lesson that I really want to squeeze in.
Well,
so let's go
hit
to the third. Yep. So third lesson, Ren, when people know about the company who are on the inside start selling, watch out.
Yeah. Now, there are plenty of reasons insiders sell shares. The CEO, early investors, they might just need cash because they want to buy a house, because they need to send their kids to a private school.
Musk has a lawsuit.
Yeah, Musk has a lawsuit because there's other reasons. There's plenty of reasons people sell. We need to be very clear about that. But when people are selling, it's important to just think about why they're selling. The fact that Mark Wahlberg sold, an early investor, the big promoter of F45's sold in March and April, was something that people should have been like, watch out. Yeah, because he was key to the excitement and the hype when they IPO.
He was the hype man.
He was the hype man. He was a good hype man. So, he could have been selling because he wanted to finance a new movie about a Boston cop.
Yeah.
But it also could be because he was getting out of the company because he didn't believe in it anymore.
Yeah. So red flag, watch out. To find out if people are selling, it can be difficult.
Not a red flag, an orange flag, I would say. Yeah.
Pay attention.
Yeah. All right. What's your fourth lesson?
Well, my fourth lesson is I've been stung a couple of times trying to get into IPOs. And for me now, it's just a patience game. It's like if I love the company, for example, Uber, Airbnb, these all had big IPOs that eventually had a bit of a flop because we know the hype's there. There's no harm in waiting 2, 3, 4 months, let it all settle, and then make your investment decision.
And I think we haven't spoken about how to get into IPOs in this episode. If you do want to know, we can maybe do another episode or we can talk about it later, but it's getting easier and easier to actually like physically put your money into it. But I think what you just said is the really important takeaway. Just because it's easier to do it doesn't mean you should. And I think the other thing is you get swept up in the excitement and you're like, I'm going to put as much money as possible in the IPO because it's so exciting and I don't want to miss it. And this is the chance. It's going public. It's the only time it's going public. But your point around patience, I mean, it's a point that holds wherever we are in investing. You can put a little bit in, and then if it drops, you can put a little bit more. Or if you stop believing in the company or they miss all their projections, you can take that money and put it into something else. So, I think that's a good overall lesson.
Nice. Thank you. Patience. So 4 lessons there, Ren. An IPO carries a level of risk, so watch out. Be careful of the IPO projections that companies give. When people on the inside or in the know start selling, orange flag, and have patience. Don't deploy all your capital at once and get carried away in the hype. So plenty happening there. Ren, we have hit our 15 minutes. I hope people have been able to take some action out of that episode. It's been great to chat as always, and we'll pick it up with another lesson based on a business world story.
Yes.
Next week.
Sounds good. And buy tickets to FinFest.
True.